Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights US Election Special Edition. So before we start today's Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. As well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, for our daily dose, we will kickstart off with what has taken shape yesterday in terms of the news flow, key events, and their potential and their respective, we call it impact on the various cross asset classes. All right, so and as well as, okay, give me a minute. I think hopefully my screen is showing. It seems to me that the thing is stuck right now. Okay, good. I think the screen is all good, right? Okay, so basically, firstly, we'll start off with what has taken shape yesterday in terms of news flow, economic event, if there's any, and as well as the impact on the respective broad-based cross asset classes. Then for these 2 weeks of daily dose, I will share with you one particular segment called the US Presidential Election Insights, how this particular, we call it ongoing play out on this US presidential election as we head into the 5th of November polling day. How does it impact the volatility of the various cross asset classes? And as well as usual, the short-term intraday technical outlook on the various broad-based cross-asset classes that we cover, and we will round up with what are the key events and news data release to look out for today that could potentially impact the movement on the various broad-based cross-asset classes. So before we start over here, just to do, I need to do a check for a while just to make sure that everything is fine. Okay, so I think everything should be working fine in terms of the sound and as well as the screen movement of my presentation. So let's have a recap of what has taken shape yesterday first. All right, so yesterday what we could see over here is that, very interestingly, we do see a sell-off across the board in the major US stock indices, and the one that got hit particularly worse was the Nasdaq 100, which is down by negative 1.55%, and the rest also starts to shape losses as well in the red. So the SPX down negative 0.92%, the Dow Jones Industrial Average down negative 0.96%, and the Russell 2000 down negative 0.79%. So what's interestingly over here is that the potential driver that causes the Nasdaq 100, which is considered as a higher beta benchmark stock index as compared to the other three indices, the SPX, the Dow Jones, and the Russell 2000. Why? Because the Nasdaq 100 consists of high growth mega cap technology stocks that receive a lot of fund inflows due to the ongoing optimism in AI. All right, so once in a general bull market, the stock market, the Nasdaq 100 will tends to outperform. But however, if the cyclical impact starts to turn negative for this ongoing bull market, that means there could be some adverse macro event that hit the market, the worst hit will be the Nasdaq 100 because of its higher beta in nature. Okay, so what you could see over here is that at this juncture we see a sell off in the all these mega cap, 7 mega cap stocks, which has very high significant impact due to their high market capitalization on the Nasdaq 100. All right, so all of them are deeply in the red, with the worst hit was Meta down negative 3%, Amazon down negative 2.6%, and the AI juggernaut Nvidia down negative 2.81%. All right, and the reason that causes this particular move in this sell off in the mega cap technology stock was actually driven by the rising US 10-year Treasury yield. Okay, so if you look at the 10-year US Treasury yield continues to inch upward yesterday. So yesterday, okay, because right now this is the current price action. During the Japan hours, they are actually trading as well. So what we could see over here is that yesterday price action managed to stage a third consecutive day of higher level closes above its 200-day moving average. So this was Tuesday, because this was Monday, Tuesday, Wednesday. All right. So what you could see at this point in time, the momentum is rather bullish for the 10-year US Treasury, and the next medium-term resistance to watch out for will be the all-important 4.4% level, which is this major descending trend line that I drew from the high of 25th of October, where previously price action got rejected on the 25th of April. Then thereafter, it did that sell off over here. So this particular sell off at this point in time is actually caused by the anticipation of the start of the interest rate cut cycle by the Fed. And this push up over here is more or less related to the US presidential election, where Trump has a higher odds of winning based on the betting market. So later I'll touch on more about this US election. Why does it impact the 10-year US Treasury yield to be pushing up higher and higher as we head into the 5th of November polling date, which is about 2 weeks from now. So that means, i.e., given that there is still a chance of it pushing up to this 4.4% level. So we got to be very mindful about the movement of the US benchmark stock indices right now, because we do have adverse macro event that is taking shape that could actually create a bit of negative feedback loop into the major US stock market, where the Nasdaq 100 got hit yesterday. But what's interesting over here is that the Nasdaq 100, yesterday I do highlight in my short-term intraday technical outlook that we still have that bullish bias within the kind of very tight sideways range configuration, where 20,000 is a key support. And amazingly, Nasdaq 100 managed to survive at the 20,000 mark. So if you look at the intraday movement of the Nasdaq 100 over here, okay, this was around the 20,000 here, where prices came down and shaped that push up. And as we are speaking in today's Asia session, the Nasdaq 100 continues to actually rise as well. Okay, going to rise as well during Asia session. Why? Because of this rosy, better than expected earnings result from from Tesla. Pardon me, from Tesla. So Tesla reported its earnings after the close of yesterday US session. That means, i.e., at around 4:15 a.m. Singapore time today, it managed to beat consensus by a high margin. Okay, consensus is looking at 0.60 cents earnings per share, but it came in at 72 cents earnings per share, where we start to see Tesla manage to actually shape a after hour close of 12% return. So if you look at Tesla share price in the after hours, okay, it managed to actually went up by 12%. Okay, this was the after hours price. So as we know that Tesla is also one of the mega cap technology stocks residing inside the Nasdaq 100 that has a significant influence on it as well. So that actually also create a positive feedback loop on the Nasdaq 100 CFD index, where our price action is based on the Nasdaq's futures, which is trading right now during the Asia session. All right, so that is on the movement yesterday that's taking shape on the major US stock indices. And one more particular movement I want to share with you is more pertaining to the FX market. So on the FX market, what we could see is that yesterday I do highlight that there's one key resistance level to watch out for on the dollar yen, which is 151.95. If we have a breakthrough above 151.95, this is where we could potentially see a further spike up. All right, so that 151.95 was taken out during the start of yesterday's European session, right before the start of yesterday's European session, and it spiked all the way up. And what we could see here is that the dollar yen is a kind of an outlier against the other dollar major pair, where yes, we start to see other dollar major pair, the dollar shaping so-called some form of dollar strength coming back, some form of persistence dollar strength coming back into the FX market, also pertaining to the US presidential election, which I covered yesterday, due to the higher chance of Trump winning the White House based on the betting markets, and given that his preference for tariffs against China and against the rest of the world, that could potentially lead to a medium-term perspective of dollar strength coming back into the FX market. So market is now jumping ahead of this event taking shape that caused this kind of dollar strength. We call it persistency that was seen in the start of late 2 weeks ago and now stretching into this week as well. Okay, and also the movement of this dollar yen so far has also been driven by two localized events in Japan as well, where Bank of Japan governor, he actually spoke on the sideline during IMF annual meeting that is still ongoing this week. He did mention over here is that it's still taking time to hit inflation goal. Okay, it's still taking time to hit inflation goal, so that is coming in as rather dovish. But then what we could see in today's Asia session, we do have some leading economic indicator out from Japan, which is the services PMI, came in shockingly weaker than expected. So previously the services PMI was very healthy, still hovering above the 50 level expansionary range. So just a quick recap for those who don't understand what is a PMI. PMI is actually based on a survey based data collected by the MIKIT, which is the compiler of this globalized manufacturing and services PMI data compiler. So they will actually send out survey form to the services industry and the manufacturing industry, giving a list of item to gauge the sentiment of the manufacturing sector and the services sector in Japan. All right, so the services sector in Japan previously was, if you look at the trend over here, okay, hopefully it loads. Okay, give me a couple of seconds because usually it tends to hang while we are speaking. Okay, so over here, previously since July, August, September, it tends to hover above the 50 level mark. Yes, there's one outlier in June that actually went as low as for almost the same level that was printed yesterday. So what we could see over here is that it slipped to 49.3 in October. So this is a flash figure over here. So yes, this could be a potential outlier again as well, very similar to June, but market participants view this as a sign of weakening. That means it could create a potential negative feedback loop, at least in the short term, that the Japanese economy is not at the Japanese services sector is not as robust in the past 3 months, and that could potentially see the yen weaken further as well. And also do not forget, at this point in time, we also do have a ongoing localized key risk event that is taking shape this coming Sunday, which is the Japan snap general election, where there is actually rumored on the grapevine, as reported by local press, that the current incumbent political party LDP, which is just elected its new leader, which is the new Prime Minister Ishiba, they might not be able to hold on to their majority seat in the parliament. So that also causes the yen to weaken as well yesterday. And given the fact that it's not BOJ who does the FX intervention is under the instruction of the Ministry of Finance that instruct BOJ to actually intervene in the FX market if we start to see high volatility. So given this upcoming snap election that is taking shape on Sunday, so that could potentially explain to us why the Japanese government officials for the Ministry of Finance choose to remain quiet at this juncture. All right, and with that, the manufacturing sector continues to sluggish in Japan, as shown by the manufacturing PMI flash data, still continues to come in below the 50 level mark. So it slipped slightly lower at 49 in August compared to 49.7 that was printed in the previous month. If it came in at 49 in October, pardon me, and slipped slightly lower from 49.7 in the previous month of August. All right, so now with that, that actually sum up these two key events that are pertaining more to the FX market and the major US stock indices. So now let us now jump our attention to this special US presidential election insights. Now I share with you all. So very quickly, let's look at the poly market odds again. So if you look at the poly market odds over here, the market, this is live data. We are still seeing Trump leading by a rather significant wide margin against Kamala Harris. So 60% to Trump and 40% to Harris, okay, based on the betting markets over here. All right, so there's still a margin that is still wide. So what's interesting over here is that the swing states, all right, so this swing states over here is the states that may significantly decide who will win the White House based on past data, past polling data in the last two elections. And the most important one was Pennsylvania. So if you look at the press, there's a lot of we call it activities around Pennsylvania that's being done by Trump and Harris to woo the voters that's still in between the fence. Why? Because among these 6 swing states, Pennsylvania has a higher weightage of electoral votes. That means all these states over here are not weighted equally, right? So the one that has a higher electoral votes will have a higher significance. Okay, so Pennsylvania is considered as a key battleground. So based on political expert commentary, whoever wins Pennsylvania potentially has a high chance of winning the White House. So what you could see over here is that Trump has comfortably lead Pennsylvania now by 60% against Harris, which is 40%. Okay, so that's why actually it translates to this betting odds that almost into 60 to 40 as well. Okay, because of the significant influence on Pennsylvania. Who wins Pennsylvania has a higher chance of winning the White House. So this I'm trying to actually explain to you the significance. So at this moment in time, Trump is actually leading based on the betting markets over here. And if we look at the real clear, but this is only based on poly market, which is live. And if you look at real clear politics, betting odds. So what real clear politics, this is not live, it's about 1 to 2 days delay. They take into account of 1, 2, 3, 4, 5, 6, 7, 8 betting sites, and they sum up the average. Almost the same as poly market, which is at 60% to 40. So real clear market average betting odds is at 59 to Trump and 40 to Harris, about the same. Yeah, about the same. So this data over here, okay, let me put it in 6 months. Okay, it's based on 22nd of October, so it's slightly 2 days later. Okay, 2 days later. And even though if you look at the polling odds for the key battleground, okay, so this top battleground, right, it's not based on betting odds, it is based on poll. So poll is based on survey. So this survey also data is not live, is kind of 1 day late, 23rd of October. So overall, right, you see Trump still leading by 48 to 47. So this is rather neck to neck, is still rather kind of slim. So among all the key battleground over here, so for RCP, what they did, they add in North Carolina. So there's 7 of them compared to poly market, which is only 6 over here. So what you could see over here is based on polling data, which is 1 day later, the polling data still skewed towards Trump, a slight Trump advantage, but the margin is much more slimmer as compared to the betting odds from poly market. So you look at the key major battleground of Pennsylvania, Trump is only leading marginally by 0.5, all right, 48 to 47.5. But nevertheless, market participants now are still looking at a Trump trade narrative that is gaining traction. And one of the Trump trade narrative is, we know that he wants to have a higher tariffs targeting China, and an additional 10 to 20%, maximum 20%, that is likely to be imposed on the rest of the world, goods coming into US. And what you see yesterday, there was actually another announcement from him during his so-called road trip to one of the key swing states, where he did mention that he will exclude Asia and European cars from vehicle tax break plan. That means he only give a favorable tax concession to cars made in the US. So that could also potentially see retaliation from other Asian and even European cars manufacturer. So that net potentially, in a medium term perspective and a long term perspective, could be leading to higher inflationary pressure in the US. So that actually explained to us why the 10-year US Treasury yield is rising. And let me share with you all this particular interesting intermarket dynamics as well. So this is an intermarket dynamics going in line with the current US presidential insights. So what you could see over here is that this is the US 10-year Treasury, this is the monthly chart. So we know that since March 2022, this is the low of 0.33, price action starts to break up. Okay, a very clear major bullish breakout from this very long term, more than I would say that it's more than 20 years of descending trend line or descending channel. That means, i.e., the 10-year US Treasury yield, based on purely the price action of technical fundamentals, technical analysis, there is low odds of it slipping back down to that 1% mark again. So either it hover around the 2% level, the next resistance to go is a 5% and 5.25%. And what you see over here is that we start to see a very strong push up at the start of this month, and right now it's heading towards the end of October by this very strong bullish Marubozu candlestick. All right, reinforced by this ongoing Trump trade that is playing out right now, given the fact that betting markets and based on the polls, Trump seems to be in higher chance of winning the White House based on the current data at this juncture from the betting markets and the polling data. And what's interestingly, how does it impact the relationship between Nasdaq and S&P 500? So we know, as I mentioned, that Nasdaq 100 is always a high beta major stock indices. That means it's the big brother. If this big brother starts to underperform, it may slowly spread into a negative feedback loop into the entire US market. Not immediate, not intermediate, or not very fast. It could sit down generally as the negative feedback loop starts to play out entirely. So what you could see over here is that, given this spike up in the US 10-year Treasury yield, is this particular movement here. Previously, the ratio attempt to do a fresh all-time high in June, and since the US 10-year Treasury keeps spiking up, and this month over here, it actually reintegrate back below the former breakout point. So could this be a potential failure breakout? The answer will only confirm if the price action starts to break down below this support over here. Okay, this ratio support, like if it starts to come down an inch lower, there's a high chance that the ratio stage a failure breakout. That means, i.e., the Nasdaq 100 will start to shape a significant underperformance against the S&P 500, which means we could potentially see a chance, an increased chance of at least a medium term to major top that has already taken shape on the Nasdaq 100 in July. Because so far, the Nasdaq 100 hasn't made fresh all-time high yet, whereas the S&P and the Dow Jones has already continued to print fresh all-time high in the month of September and October. All right, so this is something I want to share with you. US presidential insights for today. How does the ongoing Trump trade narrative that is in the forefront now impacting the 10-year US Treasury yield? And how does this movement, in the steep movement of the US 10-year Treasury yield, is impacting the major US stock indices performance from a medium-term perspective? All right, good. So now, with that, let us now focus our attention to the intraday technical outlook. So this intraday technical outlook is a bit different from what I shared earlier. So this is more of a very short-term perspective, primarily driven by positioning and technical analysis rather than fundamental. All right. So with that, let me expand my screen so that you guys could actually see a better view on the chart. Okay, so now let us start with the FX market. Okay, so on the FX market, the euro dollar yesterday slide, but it still managed to hold at the 0.780, 0.750 pivotal support that I highlighted yesterday. But given this very continued persistent push up in the US 10-year Treasury yield, my bullish bias conviction has been reduced on the euro dollar despite it holding above the support level. And with that, we also continue to see this bullish divergence on the RSI continues to play out, where it starts to shape a higher low from here. Okay, as price action trade a lower low yesterday. So with that, we will flip to a neutrality stance first for today. So neutral between 1.0810 and 1.0750. So 1.0810 was yesterday's European session high. Only a clearance above 1.0810 will revive the bullish bias, at least for it to seek out a near-term resistance coming in at the 200-day moving average, which confluence with the intermediate resistance zone of 1.0870 / 1.090. And if you will do the Fibo retracement, taking into account of this ongoing decline from the high of October all the way down to yesterday low, that also confluence with the 23.6% Fibo retracement level. Right, so that's for the euro dollar. Now flipping our attention will be the sterling dollar. So we start to see the sterling dollar breaking down below the 1.2980 level. So if you look at the daily chart very clearly, it actually shaped a daily close below this 130 1.2980, which was the former major descending trend line. Breakout turns into a pullback support, and yesterday the pullback support managed to can't hold and did a daily close below it. So that is a kind of a bearish sentiment on the sterling dollar being depicted by the daily time frame. And what we could see over here is that potentially it could start to mean revert back towards the 200-day moving average again. So, and also the RSI continues to shape lower low and hasn't hit the oversold level. So at this juncture, on a shorter term perspective for today, we got to respect this bearish price action as being depicted by the higher time frame chart, which is the daily chart. So with that, I will flip to a intraday bearish bias on the sterling dollar. On the sterling dollar, I'm going to respect it. So given that the price action on the hourly time frame has started to exit from the oversold level, so potentially there could be a minor bounce taking shape first before any potential downside pressure starts to reinsert itself on the sterling dollar, given this exit from the oversold on the hourly time frame, hourly RSI, pardon me. So a potential bounce, a resistance to look out for will be at 1.2955. 1.3010 will be my short-term pivotal resistance for today. So as long as this bound didn't surpass above 130.10 level, we will flip to a intraday bearish bias on the sterling dollar. Next near-term support level to watch, pardon me, 1.2860, followed by 128 figure level, which is the 200-day moving average, I think as a support level as well at 128 figure level. However, a price action with stage an hourly close above 130.10, today's intraday bearish bias will be invalidated to kickstart a minor recovery for the next near-term resistance to come in at 130.60, followed by 131.07 next. Okay, so that's for the sterling dollar. Now, turning our attention will be the Asia Pacific currency against the dollar, starting with the dollar yen. So what you will see over here is that the dollar yen cleared above the 151.95 level yesterday, and also above the 200-day moving average. So what I could see over here is that yesterday it hit a very strong extreme overbought level as being depicted by the hourly RSI over here. Okay, so this overbought level is the highest in the last 3 months. So with this extreme overbought level, price action actually did that pullback, and with the RSI now still hasn't hit the oversold level, potentially this minor pullback could do a bit of minor extension downwards to revisit 15190 using 15110 as my short-term pivotal support for today. So this what is this 15110 is in fact this minor congestion area here from this Wednesday to Thursday breakout. This is where the price action stage a very strong breakout and turns into a significant pullback support, at least from a short-term perspective. We also correspond very closely to the 200-day moving average, I think, as a pullback support level area as well, pardon me. So as long as this minor pullback didn't surpass below 15110, long-term short-term pivotal support for today. Okay, there's a typo error here. Let me adjust, my apology. Okay, so this 15110 will be my short-term pivotal support. So as long as this minor pullback didn't break below 15110, short-term pivotal support for today, which is close to the 200-day moving average as well, we will flip to a intraday bullish bias to respect this ongoing positive momentum that is still playing out in the dollar yen. Next resistance level to watch 15380, followed by 15470, 15480, which is the one-time Fibo extension taken from the low of 30th of September, and the 15470 level. If you look at the daily time frame over here, will be the next resistance level after 15195 that's been taken out yesterday, which is this former medium-term swing low of 15th of May and 5th of June that was broken down and previously tested and shaped that very steep sell-off, okay, during the period of 10th of June all the way down to 5th of August. That actually lead to that significant sell-off. So this level will be pretty much next significant resistance level to watch, where the price actually reacted significantly in the past of 30th of July to 5th of August that induced that previous steep sell-off. Right, but however, if price action starts to have an hourly close below 15110, then today's intraday bullish bias will be invalidated to see the start of a failure bullish breakout scenario yesterday above 15195, where price action could start to reassert into a kind of bearish momentum, at least in the short term, taking shape. Next near-term support level to watch 15330, followed by 14895, which correspond to the rising 20-day moving average. So that's for the dollar yen. Okay, turning our attention will be the Aussie dollar. So Aussie dollar, due to mixed element yesterday, we flipped to a neutrality stance over here. So price action came down, broke below the neutrality limit at around 66.40. Tested the 200-day moving average before shaping a bounce back up as we are speaking right now. So what I could see is that this bounce on the Aussie dollar also taken shape where the RSI hit a oversold region on the hourly time frame. It exit from it, and during this period where it starts to inch down towards the oversold region, there is no bullish divergence as price action continues to shape lower low on the RSI in line with the lower low in the Aussie dollar price action as well. So with that, there's this lack of bullish momentum that because there's no bullish divergence on the Aussie dollar. We will flip to a intraday bearish bias on the Aussie dollar using 66.90 as my short-term pivotal resistance level. First support level to watch will be 65.95, followed by 65.75, which is the minor congestion area here, okay, of 15th of August to 9th of August. Below it exposes 65.60, which is this minor swing low area of 15th of August, where there's a V-shaped recovery at that point in time. However, if price action starts to have an hourly close above 66.90, then today's intraday bearish bias will be invalidated on the Aussie dollar to kickstart a minor recovery scenario for it to mean revert back upwards towards 67.20 and potentially even 67.60, which confluence with the 50-day and the 20-day moving average, I think, as a similar resistance level as well at 67.60. Okay, so that sum up the intraday technical outlook on the major FX dollar pair. And for today, I want to share with you all one FX cross pair, which is the Euro Swiss. Okay, so previously I did mention about the Euro Swiss about 1.5 weeks ago, where we do have a bearish bias. So the bearish bias on the Euro Swiss hit our support level at 93.40 before trading sideways throughout yesterday's US session. So what we could see over here is that price action continues to be rather bearish at this juncture, where it continues to trade below the 20 and the 50-day moving average, and as well as this minor descending trend line that is still in place from the high of 25th of September. So this is the hourly chart on the Euro Swiss. So with that, I will have a Titan key short-term pivotal resistance for today on the Euro Swiss using 93.80 as my Titan short-term pivotal resistance. Still maintain that intraday bearish bias. We saw confluence with the downward sloping 20-day moving average. A breakdown below 93.40 exposes 93.10 next, which is the swing low of 11th of September, and a further breakdown below 93.10 may take it down lower to expose the next support level, which is the one-time Fibo extension, taking from the high of 25th of September, 92.80/92.60, which confluence with the minus the swing low, the medium-term swing low area of 5th of August and 7th of August this year. Only a price push up with an hourly close above 93.80. This intraday bearish bias will invalidated to kickstart a mean reversion rebound scenario, exposing the next near-term resistance level next at 94.10 and 94.40, which confluence with the 50-day moving average, acting as a resistance, and as well as this swing high area of 4th of August and 1st of October and 4th of October. Okay, so that's that's the Euro Swiss FX cross pair to watch out for today. So with that, now let us turn our attention to the major stock indices, starting with the Hong Kong 33. So no change on the Hong Kong 33 as it continues to hover and continues to print out a series of higher low above the medium-term pivotal support level at 19,790/19,445. So it seems to me that it's been trapped between these two zones here, these two resistance, these two key levels, 20,850 followed by 19,790/445. But it continues to print a series of higher low that is rather positive. But price action got to break out above 20,850. So still no change. We need to have an hourly close. Yes, we still maintain our intraday bullish bias, but this intraday bullish bias conviction will only increase if we have an hourly close above 20,850 to potentially expose the next near-term resistance coming in at 21,550 next on an intraday basis. However, if price action starts to slip down and break below 19,445, which is the lower limit of this medium-term pivotal zone, support zone, intraday bullish bias will be invalidated to see the extension of this ongoing multi-week corrective decline scenario from the high of 8th of October to expose the next near-term support level at 18,230 next. So that's for the Hong Kong 33. Now, turning our attention will be the Japan 225. Still recall that Japan 225, we do have a bearish bias yesterday, and the bearish bias hit our support level at 37,800 level over here, which is also the kind of the lower limit of this sideways range configuration, all right, that is in place since the high of 27th of September. Okay, this kind of sideways range configuration. So it hit the lower limit of the sideways range, and if upon hitting the lower limit of the sideways range, which was yesterday bearish bias support level, the RSI print out a bullish divergence. All right, so with this positive element that's being seen on the hourly RSI, we will flip to a intraday bullish bias for today on the Nikkei 225, but still trading within its complex minor sideways range configuration towards the middle part of the range. All right, so using this 37,610 as my short-term pivotal support level, any potential minor pullback, okay, first pullback support level will be at 38,020. As long as it didn't surpass below 37,610, we will flip to an intraday bullish bias on the Japan 225 within its complex sideways range configuration. Near-term resistance to watch will be at 38,540, followed by 38,890, which is also the 20-day moving average, I think, as a resistance level, and the former minor swing low area of 16th of October to 22nd of October now turns into a pullback resistance level as well. However, if price action starts to break down with an hourly close below 37,610, then this intraday bullish bias scenario within this complex range configuration will be invalidated to potentially see further weakness on the Japan 225, at least for the next near-term support level to come in at 3710, which is the former minor swing high area of 5th of September and 13th of September now turns into a pullback support level. Right, so that's for the Japan 225. Now, our focus now will turn on to the German 30 or the German DAX. So the German DAX managed to shape a bullish candlestick with a bullish hammer, followed by a bullish Marabuzu candlestick in today's Asia session. All right, right exactly at the 20-day moving average, which is also the short-term pivotal predefined support level that we highlighted on the start of this week, 19,320. And what we could see yesterday is that we start to see the RSI shaping the bullish divergence as well. So given this emergence of this positive technical element, where price action managed to shape a bullish hammer candlestick during the US session yesterday, we still maintain that intraday bullish bias on the German 30 using 19,320 as my short-term pivotal support level, but price action got to break up very quickly above yesterday's intraday high, which is very clearly a minor congestion area as well from a minor time horizon perspective. 19,490, above 19,490, potentially revisit the current all-time high resistance area at 19,690/19,755. Only an hourly close below 19,320 will invalidate today's intraday bullish bias to expose the next near-term support level at 19,130, followed by 18,960 next. 18,960 next, pardon me, which correspond to the rising 50-day moving average. All right, so now turning our attention now will be the major US stock indices, starting with the Wall Street 30. So the Wall Street 30 yesterday broke below the 20-day moving average and also the 42,600 handle, which is our short-term pivotal support level. So technical elements are rather mixed right now. We will actually flip to a intraday neutrality stance first on the Wall Street 30, which is the Dow Jones Industrial Average, using yesterday's breakdown point as the upper limit, 42,720, followed by 42,180 next. All right, unless price action managed to recover fast with an hourly close above 42,720, then we would reinstate our short-term intraday bullish bias on the Wall Street 30 to potentially revisit 40,060, followed by the current all-time high area at 43,360 next. All right, now turning our attention will be the Nasdaq 100. So before I go on the intraday chart on the Nasdaq 100, let me touch on the Nasdaq 100 daily time frame chart. So if you look at the daily time frame chart over here, yes, it continues to print a higher high that was seen on the 15th of October to, seen on the 26th of September to 14th of October, but the daily RSI continues to remain compressed below this parallel descending trend line. All right, and also the market breadth, this is the 10-day moving average of the 52-week high minus the 52-week low of Nasdaq 100 component stock. It continues to print out a series of lower high over here. That means in terms of market breadth, there are lesser 52-week, the Nasdaq 100 component stock on the average is making lesser 52-week high versus 52-week low. All right, so that is not a very good sign. So yes, on the intraday basis, it may continue to push up higher, but from a medium-term perspective over here on the daily time frame, after failure to stage a bullish breakout from the 20,790 long-term pivotal resistance, which is the current all-time high, and depicted by this bearish moment, not so rosy daily RSI, and this bearish reading is being seen on the market breadth, which is the 10 days moving average of the 52-week high minus 52-week low of Nasdaq 100 stocks, continues to print a series of lower high rather than higher high. And couple that I shared with you earlier on in the US presidential election insights, and as well as the intermarket dynamics on how the 10-year US Treasury yield has an impact on the ratio of the Nasdaq 100 versus the S&P 500. From a longer term, medium term perspective, That means, i.e., whatever Nasdaq 100 that is doing right now over here, this high over here, 20,790, could be potentially a medium term or major horizon top, right? A top. That means, i.e., in the next couple of weeks, we're talking about weeks, not day. Next couple of weeks, multi-week perspective, we may start to see a multi-week corrective decline. All right, but on the very shorter term basis, price action can still continues to actually slightly higher. Why? Because next week is the release of the major cap technology stock Q3 earnings, except for Nvidia. So next week we start to see a slew of earnings release from Apple, Meta, which is Facebook, Microsoft, and Alphabet, except for Nvidia. And we know that recently the earnings expectation has been lowered much more, pretty significantly, and very easily these stocks could actually beat their lower bar earnings expectation. All right, so there could be still potentially some form of short-term upside that could be seen on the Nasdaq 100. So with that, that also explains why the Nasdaq 100 managed to survive the 20,000 short-term pivotal support level, where market participants has now starting to take into account of next week's earnings announcement on the mega cap stocks as well. All right, so with that, for sure, no change because of this V-shaped recovery that is picking out on the 20,000 lower limit of yesterday short-term pivotal support that we highlighted. Still maintain the intraday bullish bias, but bear in mind on the daily time frame chart, potentially the Nasdaq 100 could already print out a medium term to major top configuration. So on a daily basis, taking one start at a time on the intraday basis, first resistance to watch you got to clear will be 20,410, followed by 20,615. All right, so 20,615, I repeat again, is the minor swing high of 16th of July. However, if price today suddenly break down below 20,000 with an hourly close below it, then forget about this recovery where Nasdaq 100 potentially could shape a further impulsive downside movement on a intraday basis to revisit the next near-term support level at 19,750/19,630, which correspond to the rising 50-day moving average as well. All right, so that sum up the intraday technical outlook on the major stock indices. Now, turning our attention will be the commodities market, starting with Gold XAU/USD. So surprisingly, Gold XAU/USD managed to survive right exactly at our 2017 short-term pivotal Titan short-term pivotal support that we highlighted yesterday. Also, this minor ascending trend line that I drew from the low of 10th of October. So yesterday, gold hit our first resistance level, 2,760/200763 before shaping that pullback. And that pullback managed to survive at the 2017 level. So still no change, still using the 2017 level as my short-term pivotal support level. And for today, on an intraday basis, I got a slightly higher first resistance level to watch out for. Okay, will be this level here at 2,738. Above 2,738, potentially revisit yesterday's resistance level where it actually did that pullback or that sell off, that intraday sell off at 2,760/2,763. Only an hourly close with a clear breakdown below 2017 short-term pivotal support will invalidate our intraday bullish bias today for Gold XAU/USD to kickstart the extension of this minor corrective decline to revisit the next near-term support level at 2,683 followed by /2,668, which confluence with the rising 20-day moving average. So that's for Gold XAU/USD. Lastly, West Texas crude oil. So West Texas crude oil yesterday we flipped to a bullish bias. Why? Because of the positive element that was being seen on the hourly RSI. Price action indeed pullback, stage a V-shaped minor intraday V-shaped recovery right exactly at the 71 pivotal support that we highlighted yesterday as well. So still no change, still using 71 figure level. For sure, this is indeed a key short-term support level to watch to maintain our intraday bullish bias within this range configuration of West Texas crude oil above 73.15, potentially sees the next near-term resistance coming in at 75.30, which also correspond to the golden ratio of 8th of August slide all the way down to the 18th of October low, which is the 61.8% Fibo golden ratio retracement level as well. However, if price action starts to break down below 71 figure level, short-term pivotal support, then price action will start to do another choppy decline move to revisit 69.35/68.70, which is the swing low area of last Friday swing low area, and as well as this minor ascending trend line support that is still in place since 10th of September this year. All right, so that sum up the intraday technical outlook on West Texas Oil, and as well as the intraday technical outlook on the major cross asset classes. So before we go, let's have a quick look at the calendar. What are the key things to look out for? So for today will be the release of preliminary PMI flash data for services and manufacturing for the month of October across the globe. Right? So we will have the Eurozone one coming in at 4 p.m. later Singapore time. Okay, flash PMI data for both manufacturing and services, and UK flash manufacturing PMI and services for the month of October will come in at 4:30 p.m. and followed by US will be at 9:45 p.m. All right. Then we do have one ECB official speaking, ECB Batch speaking at 9:30 p.m. on the sideline of this IMF World Bank kind of annual meeting, and followed by Fed Hamad speaking at 9:45 p.m. And what we have over here, we do have another ECB official, Metcalf. Okay, I think ECB, this official shouldn't be kind of importance because more or less it's about the same speech that they made overall. But today's key data will be more on the centered on the manufacturing PMI data releases. All right. So with that, tomorrow Asia session, there is no. Yeah, tomorrow Asia session, one thing more pertaining to the Nikkei 225 and the dollar yen will be the release of the Tokyo core CPI data, or the Tokyo area inflation rate data for the month of October. As you know, that Tokyo inflation is a leading indicator for the nationwide Japan inflation data. So something to take note of at 7:30 a.m. Singapore time tomorrow. All right. So with that, that sum up today's daily dose of market insights. Do have a great day ahead, and we shall speak again tomorrow. Thank you.